Hey everybody, Westport investors, you're going to be smiling today. Today is the day that we discuss the disposition of Westport apartments. You know, we bought this deal in 2018 and we bought it like so well. I will always go back and remember how I bought this deal. I literally was at the gym. I get a call from the broker, Tom Wilkinson. Said, hey, there's this 1997 deal that you can buy. It's in Angleton, which I really didn't even know where Angleton was, but I knew that it was in Brazoria County and that was a market I wanted to be in. I zoomed over there as fast as I could. He said he wanted $50,000 a door for the deal. And I'm thinking 1997 deal for $50,000 a door. It's coming off tax credit status. And yeah, I didn't even have to look at the numbers, to be honest. Because how are you not going to make money 3 years ago, 4 years ago at $50,000 a door? I know where my expenses are. I know what it takes us to run a deal. I did the numbers in my head really quickly, and we negotiated the pricing there in the parking lot. And today is the final step of that original plan. Today's the day we discuss selling the deal. Westport Apartments is a fantastic deal. It is. The thing is, in this economic cycle, there is a frenzy of activity for deals just like Westport Apartments. And so we made a decision that to secure the very best pricing, we wanted to sell all those deals that we have that have a tremendous amount of equity right now that are smaller, meaning they're a little bit more difficult to run. They need help. They need staff share. They need all these ideas. They can't run by themselves. It makes sense to sell them as a group. We've called that group the Rockstar 5, which is the marketing name the broker that we chose will be using. And they'll be pitching our story on why you should buy these deals. Rockstar is evolving. And what we saw during COVID was that our best collections were at our Class A deals. And we're still knocking on doors like that to get money from the eviction moratorium. And in fact, the last few days, or this month, was the month that we really pressed hard. We saw our bad debt go up from all the people that had not paid. Now, it didn't impact distributions much because we were planning for it. In fact, we had a record distribution this quarter of $1.9 million. And I'm excited to share you guys or give you guys your share of that. But I think now is the time to sell because, you know, as inflation has risen, our values have gone up tremendously. And then there's tremendous demand for these kind of deals. So they're paying tremendous cap rates, you know, lower than what I would be able to buy the last two Class A deals for. But as everything costs more, all my goods sold, so does my labor, so does our payroll. And it's harder to be able to afford the quality of staff today. You know, back when we bought this deal in 2018, you could get a good maintenance guy for $20 an hour. That maintenance guy today is looking for $25, $26 an hour. And in a more rural area like a Westport, it's even harder to find those. Well, when you have 300 units Class A paying $1,500, $1,600 rents, they can more easily absorb that $25 an hour and even pay up to $28, $29, $30 an hour for the right guy. And so we're hurting ourselves as holding on to a deal like this. And then you ask yourself, can the demographic that live here, can they afford the $150, $200 rent bumps that I'm going to have to get over the next couple of years to continue to keep up with my inflation increase goods that I have to buy, with my labor that I have to pay? So we made the decision internally as a group, asset management operations, that this is a deal that we should probably sell and reap the benefits of that purchase way back when in 2018. And I'm excited to share that with you. So what we did was we did a full broker paint a value process. We got 5 of the brokers that we felt most were likely to get us the best performance on this deal. We brought the final 3 in for a sales presentation. We picked the one that had the best balance of sales price, reference list to get that price, and the pricing that they would charge us to get that deal sold. And it was CBRE, a worldwide national player with a big reference here in Houston. They have it very clear. I want full marketing on this deal. I want it to be like as if we're shining, you know, a spotlight as saying, hey, we're for sale, we're for sale. Because I get emails every day. Every day do I get an email from somebody wanting to buy portions of the portfolio. So they're going to get their chance. They can buy it if they're the highest price. So they know that they have instructions from me that they're going to max out the attention on this. We're not here to take a off-market pricing. I want full tours. I want full attention so we can secure the very best price. So this will be part of a $100 million portfolio, which should attract much more activity, a different kind of buyer than the buyer that I was when I bought this deal in 2018. We're looking at an estimated sales price of $21.4 million. We're looking at it'll take about 3 to 6 months to secure that, and then we'll distribute the money within 7 days. You're looking at a monster 3.6 return on this deal in only 4 years. Like, that's insane. $100,000 becomes $360. So this is what the breakdown looks like. $21.4 million sales price, loan payoff of 6.1, which means that we paid about $8 million. Yield made is $1 million. That's what our prepay is. Net proceeds of $14,198,000. Closing cost of $642. My override of just under $2 million, but I think as you see with the distributable amount, I earned it. You got over $11 million that we can return back to the investors. Super excited to be able to present that to you. If you want your share of that $11.5 million, you don't have to do anything. By doing nothing is your confirmation to us you want to sell. By telling me no means you don't want to sell. We'll tally it up. We'll send the results to everybody. And if we have the votes to move forward, then we will continue with the sell. But I think it makes complete sense after 4 years to take 3.6 equity multiple, $11.5 million off the table, and then start to put it back to work again. Because there will be depreciation recapture, there will be capital gains on our gain, and we have significant gain in a 4-year time frame, and to put that money right back to work. To put it back to work in the kind of deals that after being in this business for 15 years, I know I want to buy. I know I want to buy in Class A deals that are highly sought after, trophy quality, institutional quality. When BlackRock, Blackstone, KKR, all those guys are your competition to buy these deals, you know you're playing in the right fishing hole. When the biggest, best who buy real estate for a living come up to you and they want to offer on the deals that you have, you got highly sought after deals. And they're highly sought after because they have learned that they will hold the test of time. They'll hold the value. I wish I could have gone back to 2011 and 2010 when I bought my first deals and bought the biggest and the best, but I couldn't. I didn't have the confidence. I didn't have the courage to do it, or a reference to do it. I had a shopping list, like I'm going to grocery store, H-E-B, and I have $100 to spend, and I got to make it last. If I would have known that, what I know now, I would have bought the best quality I could have gotten. I would have probably had increased cash flow over the time. I still would have had the same equity, and I would have had tremendous assets, tremendous high value assets. So as Rockstar moves to its next chapter, we're buying the better deals. We're buying the deals. I study the Sam Zells. I study the Donald Trump seniors. I study these guys that are where I want to be. And I'm understanding, what do they buy? What has made them wealthy? What has made their investors wealthy? To be able to buy those kind of assets we're buying is huge for us because, 10 years ago, 20 years ago, we were locked out. But because of crowdfunding, because of our relationships, because of the education that I've learned from Lifestyles and other real estate clubs, I realized that they are accessible together. We've done a hell of a job at Rockstar the last the last 12 years, and we've won almost every award there is out there. It's because we have continued results, just like this deal, knowing that this is the deal I want to leave the gym for and make it in the parking lot. It's the same thought process. Like, I know I need to get out of these kind of deals today, and I need to get into the younger assets, the assets that have a larger team, that have more units, because more units equals more income, and more income means more options. I can have a bigger marketing budget. I can drown out my competition. I can drown out Westport. I can pay for the very best staff. I can recruit away from Westport because they can't afford to pay more than $25 an hour. It's just learning the game. It's understanding how the real estate cycle works. So it's been a great ride, everybody. It's been fantastic. It's another successful business plan. It's another proof of concept. It's another feather in the Rockstar Capital hat. Many of you are investors from other deals, even some that we're also selling as part of the Rockstar 5. It's a fantastic opportunity to get our cash and redeploy it. As you know, the government's printing money like there's no tomorrow, and inflation is rising crazy, and keeping your money in the bank is making you 0.0 nothing. The way you stay ahead of inflation is you invest in hard assets like real estate, and you get cash flow and you get the equity creation, the equity multiples that we've been able to do here at Rockstar. Putting it in deals like our Class A deals like Ascended Lakeview, Valencia Place, Aspire, you're securing that asset, you're securing that wealth, you're starting the depreciation cycle all over again, you're delaying capital gains, hopefully in perpetuity like I'm gonna do, and you keep making money on your investment. Because as inflation rises, and it is rising, everything you buy is gonna go up in value. Now, I wanna put my money in the best assets that I can. I want to put in the assets that everybody wants to own. There's a reason why there was 16 offers on each of our last 2 deals, and I think 12 on the deal before that. People want that quality of assets. I get emails every day from somebody wanting to buy our assets. So I know they're in high demand. We're going to fetch the biggest price possible. I think with a portfolio probably going to be north of $100 million, with a $100 million valuation, people from everywhere, big, real estate firms, big houses are going to come wanting to buy that $100 million portfolio. So I think we're going to see a lot of competition, and I think it makes a lot of time to sell now, dear before us with our other 4 deals. So if there's any questions, please send me an email. Otherwise, don't do anything else. I'm going to assume that means yes, and we'll move forward on the deal. Thanks, everybody.